customers are still, underbanked. Customers are still frustrated. And that's, a challenge to ourselves and should be for my fellow competitors in the sector, where, we need to solve this problem, So, and that's where I see the future is.
Guys for joining us today. Thank you to our audience, and of course Gaurav, my partner in crime, and most of all, thank you to Chijioke for joining us again. Can I share with the audience that you were actually waiting for us 24 hours ago?
Early bird gets the worm.
He was so keen. He was so keen to do this. He was so keen to do this session that he was online 24 hours and 10 minutes ago and messaging me on WhatsApp going, why aren't you online? And I was like, dude, you're a day early. And just to illustrate that Chijioke is always early, he started Carbon, or a predecessor of Carbon, was it 10 years ago?
2012, yes.
2012, which is 10 years ago. Time flies. So obviously in the last 2, 3, 4 years, everyone's seeing, everyone and their friend is setting up a fintech right now, right? In Nigeria, in the UAE, in Egypt. But in 2012, I mean, like the word almost didn't exist, right? I mean, fintech as a word, or a digital finance. What were you doing in 2012?
I mean, to be fair, we weren't really a digital, we were tech enabled. Those are the words we used at the time. And, we saw a gap in the market, as it still exists today, where there's a significant amount of underbanked people in Nigeria, and we felt that we could, even as tech-enabled as we were then, we were miles ahead of the banks in terms of fulfilling people's credit demands. So my brother and I, set up what we called then One Credit. I think we probably, if there was a prize in fintech for different names, I think we're on our 4th name right now. We would get it. One Credit to One Finance to Pay Later to Carbon. So we set it up, and you're right, in 2012, there wasn't any, the names that are household names now, Paystack, Flutterwave, did not exist at the time, but they were pivotal in our transformation, because, with the likes of Paystack coming into Nigeria and setting up, we were able to, move from a sort of an offline world where, when we started, if I wanted to give you a loan on it, our agent would go to your office, and if you wanted a loan, we would take 12 checks. So for the 12-month loan, we'll take 12 post-dated checks, a photocopy of the passport. 2016, when we came into Pay Later, we used Paystack. We would take your debit card and tokenize that, and be able to debit your card in the future as many times as we needed to. We had the bank verification number, which was introduced by the Central Bank of Nigeria in 2015, which basically allowed us to identify all our clients. And it enabled us to go from a business that was focused on Lagos to a business that was now focused on Nigeria, the whole of Nigeria, anywhere in the country where anyone had a BVN and a debit card and a smartphone. So that really was how we started.
So there's some awesome facts in there. You start because there's a gap in the market. Credit, even today in 2022, credit is a challenge, or formal credit, across so many countries, which we sometimes forget when we live in the US or the UK, when credit is freely available, or even in the UAE. I think Gaurav and I get phone calls every hour of every day offering us a credit card.
Not me, just you.
Oh, you get the calls for the villa in the Palm, I guess. I get the credit card offer. But anyway, so it's still a huge credit gap, massive credit gap, and that's what you're trying to fill. And then 2015, 16, you get identity, digital identity. And in 2016, 2015, Paystack, Flutterwave, it's the start of these digital payment companies. Spend a little bit more time for the audience who don't know Nigeria, as well as obviously you do, explaining what all that meant. I mean, what happened? Like in 2014, how did you establish identity? In 2016, what happened? It's a bit like, I guess, almost like the India's Aadhaar moment, right? When you have BVN in Nigeria.
No, I mean, as I said, in 2012 to 2015, we would need to see you physically, take photocopies of your paper photocopies of your passport, or your driver's license or your voter registration.
Is that why you called it carbon? Because it's a carbon copy?
No, because we want, like the element, we want to be everywhere for our customers.
Everywhere.
That's the official line for carbon. But so you really couldn't you really couldn't scale. When I look at our first investment memorandum to investors when we made a pitch in 2014, the pitch was Carbon wanted to be pan-Nigerian, so we wanted to open 7 offices in Nigeria, in the key economic cities, and have 100 agents in each office, and that's 700 people. And with the introduction of like digital payment providers, we were able to just scale without having to leave our office. With the introduction of the bank verification number, and so what does that mean? It means that if I have 7 different bank accounts, I still have that one number that ties everything to it. So and we could actually check this remotely and verify it. So we didn't need to see you as we did. So life became simpler for us. So it was really transformational, because if that didn't happen, we might still be a very manual business, because the ability to verify a client remotely wouldn't exist. So I'll just give you an example. In 2014, everyone was talking about direct debit. So, the bank said, hey, we have direct debit, so why don't you use that? So we said, okay, that's a better system than our checks, because we had to buy safes for all these checks. So it came to a situation where we were buying massive safes just to keep checks that we were never hopefully going to cash. So this tier 1 bank that shall rename nameless said, hey, we have direct debit. So we signed up to direct debit. When it came for the loans to be due, nothing was paid. And we called the bank frantically, like, what's going on? All our direct debit mandates are failing. And the bank said, no, we thought that it's internal. So it's only a direct debit from, if you bank in the same bank with us. And it was just a disaster, whereas with Paystack or Flutterwave with the debit card, you can bank anywhere and we can get our money. So this is huge for us.
So those are key enablers, both in terms of digitizing identity and digitizing payment flows. Recently, I think it's a year ago, or just about a year ago, you launched a new product, or maybe you went back to a product that you had in mind, BNPL, as we're calling it around the world. Tell us a little bit about that kind of product evolution. Obviously, 10 years ago, it was like there's a credit gap. Now you are focusing in on a product that was very much tied into e-commerce and payment and installments. And what was different about this product? Is this just, without being rude about it, is this a bit of branding, or do you fundamentally change things?
So, Carbon Zero, which is our buy now, pay later product, is born out of painful experience over the years. So we've actually done device financing with Etisalat, one of the big telcos in 2013. We did device financing where we would basically finance mobile phones. In 2015, we created the brand Pay Later, which was originally supposed to be a Klarna clone. And we went to the likes of Konga and Jumia and said, hey, let's do collections for you. Let's get a 4 or 5% rebate, and we'll pay you the money. We'll fund the purchases and we'll just go and collect. And at the time, the e-commerce platforms were reluctant to do this for several reasons. One, they didn't want to integrate with anyone, and 2, they didn't have the margins to sort of dish out 4 or 5%. So what we did instead was we added on an interest for sort of payments at the POS front, and customers hated it. People don't like they don't like the idea of borrowing for purchases that are not deemed necessary. So, paying later for a TV or fridge seems frivolous to customers. So, and also when we tried to also work with other partners, what happened was, every merchant would put their costs on, and then we couldn't price attractively to the customer. So with Carbon Zero, we said customers want simplicity, and simplicity is giving them the same price that they get at the storefront. So if you go into a Carbon Zero merchant, and if, let's say a TV is $200 for cash, the Carbon Zero price is $200 as well over 3 to 6 months, and at no additional cost to the customer. We get a rebate from the merchant, and so far it's been an attractive proposition, and I think this is what customers want.
And can you share any data points, either client numbers or activity levels or anything, just to flesh out how big or relevant this product has become for you?
So right now, it's still early days. But for some of our merchants, we have about 60 merchants so far, and from the likes of the iStore in Nigeria, Simba, Spar, Conga. So a mixture of e-commerce players, electronics, furniture, healthcare. And for some of our merchants, we're about 10% of their sales. So we're pretty significant so far. So we're very confident that as we scale, we will be a critical part of the business. And the opportunity is huge. When we think about retail in Nigeria, I think in 2019, total retail spend is 150 billion in Nigeria, of which non-essential retail sales was about 27 billion. And that's virtually untouched by credit. It's mostly cash. So it's a huge opportunity if we can actually make a dent in that number. So that's why we think that Carbon Zero is the future. Got
it. Before I hand over to my partner in crime, Gaurav, just a reminder to the audience, if you're listening to this live or on the podcasts, subscribe. This is available on all your favorite platforms. You name it, it should be on there. So do subscribe and listen to us every fortnight. Gaurav, I'm sure you've got lots of deep dive questions now on how the guts of the business work and things like that. So over to you.
Thanks a lot, Ronit. Actually, it's been great hearing your story and getting a lot of understanding on the building blocks needed before being too early in placing product in the market in Nigeria. So it's very insightful. Thank you till now. But I actually want to go one step just before you even started. I'd love for you to share with us, what was your background? Were you a fintech background before you started to start with? Because now a lot of people are coming into this space creating fintech companies with zero background in payments, infrastructure, anything else. They just see a desire for a market and they're creating it. But what was your background before you started the company, before it changed its names 4 times, right, into different evolutions of that? And what I want to try and capture is how you evolved too. That's where I wanted to say. So can you tell us where you actually started? You saw a gap in the market, but how and why, and what was your background? Can you tell us that before you started, those early days?
So my brother Ngozi and I, we have finance backgrounds. I worked in private equity and also for the private sector arm of the World Bank, the IFC. So I was doing agribusiness and general manufacturing investments in sub-Saharan Africa. He was an investment banker in JP Morgan in Wall Street. And prior to that, he worked in the UK for Anderson. So we had a finance background when we came to Nigeria back to Nigeria in 2008. And we set up a company to basically buy distressed businesses, turn them around, as well as start new businesses, of which Carbon was one of them. And the idea was, starting businesses that would be transformational, and there was a huge gap in the market. So credit tick those boxes. And I think that, when I look at founders today, I think you don't need, I think having a tech background helps, but I think being curious is even more important, because when we started Carbon, what is now Carbon, as our initial business was very easy for us. We're finance people. It's a simple loan. There's no data. There's no real number crunching. When we created a digital app, and we went from a position where everyone that got a loan from us initially, we would have paper documents. We know where they work. We had their pay slip. We had their photo ID. An agent had actually physically met someone. So we knew that this was a legitimate loan. The first digital product we had, you had to sign up on Facebook. Facebook was sort of was a protection we had. So you had to have a Facebook account. If you said that you had income of, let's say, 100 Naira, but you had expenses of 99 Naira, so you had a net of 1, we'd give you a loan. So whether that was true or not, we had no basis to know whether that was true or not. So
you had no data, right? You had to no data.
So we just let everything in. We had a 70% NPL ratio. We were literally, losing money hand over fist.
So you were lending off the balance sheet directly, huh?
Yeah, we were. So at one point, and this is 2 finance guys. So Ngozi and I flew to San Francisco, and for 10 days, literally told our story to everyone about the opportunity. And we said, we need help. We need data scientists. Maya of Ingressive Capital was very helpful by introducing us to people. This is around 2016, so this is way back. And people were turning us down, saying it's not interesting for us. This is not challenging. It's too easy, so we're not interested. We found a very young data science team that actually helped us, and we were able to get our NPLs down to about 30%. Then we started hiring data scientists internally. But it was a very painful learning curve from going from 70% NPL to 30% to now about 10%. But it was because we were interested. We didn't have the background, so we really had to learn. And to this day, I think my co-founders had to become a data scientist. He's had to become a risk expert. We're taking courses we still take courses on marketing, on product management. You can't take anything for granted because it's an evolving space. So it's been just a tough road, but it's an exciting journey so far.
Did you say your NPLs started at 70?
Yeah,
he did.
70.
He did. He said that.
I know. How come he didn't go out of business?
That's what I'm saying. He was
these were very small loans, like very tiny, like 15-day durations. But we needed to learn because as I said, and we had so many interesting stories. There was one guy who in the east of Nigeria, he basically onboarded 200 women, and he was lending. He basically used his account to give them access to our loan. So while it was a fake Facebook profile, we were actually getting repayments. So I think when I listen to new sort of digital lenders come up and they brag about we have no NPLs, I'm like, how are you learning? If you have no losses, how are you actually learning?
But didn't Tala start around the same time as you?
Tala started digitally about 2015, yes. So they were ahead of us.
It's around about this. Because it was interesting when I met Shivani in San Francisco. I remember their scoring amongst the specific community. They weren't targeting the generalist community. They were targeting a specific community. They were getting payments back earlier for certain. So it's very interesting to see the segments that they're going after at the same time, and how sort of they're on a different path of growth and trajectory, and how you guys, also started and learning. I think everyone was on a very steep learning curve, but has different experiences and keeps evolving. And this is a fantastic story. I mean, I'd love to dive into the numbers later on, but what I want to get to next is, what I want to get into is we've got into the how you started, right? Where you came from, your backgrounds, your understanding of how you approach the issues and kept having to learn. That's something I really wanted to understand, which is great. The next part I want to get into is right up to the bleeding edge of now, right? You keep evolving the business. You've changed your name sometimes. You're learning constantly. You're adapting. You're building new products. What does the next 3 years look like for you guys? I mean, where do you think with today, where people have so many tools, people have so much more infrastructure readily available to come into the business and almost meet you head on, right? I mean, I'm facing this myself. I mean, other people are facing this. It's not unique, but it's interesting to know what you're going to be thinking about, or if you can give us some insights of what those next 3 years are looking like for yourself and for what is essentially a lot of past competition, because there's so much money flooding into the region, and there's so much belief. You know, when people were slamming the door in your face proverbially, you know, when you were in San Francisco so long ago, trying to tell people that this is the place to be. Now everyone's landing up at your doorstep trying to invest, you know, in proven models. So can you tell us about that a little bit? Where's your perspective? Where's your head at for the next 2-3 years with yourself and competition? I'm very curious.
So look, I think in general, we have to focus on the customer. I think you're right. You know, when I look at fintech companies today, you know, we had to build our own algorithms, we had to build our own scorecards, we had to do things that we had to build everything ourselves. Today, you have so many fintech companies that you can actually sort of integrate with to get to market quicker. And I think that's a great thing, because that frees you up more to focus on the customer and actually solve the customer's problems. So I think for the next 3 years, you know, I can tell you a host of products we might want to launch, but it really is about what does the customer really want solved, you know, how do we meet that demand? You know, so it's really important for us, because I think one of my big gripes is, you know, we're a challenger bank, and I look at the ecosystem, and I don't think we're challenging. I don't think we're challenging enough. Challengers have to challenge. And, you know, we were making jokes earlier before the session, but, you know, you know, it's a great time for Africa. You know, we're getting lots of VC interest, lots of money, you know, coming in. But, you know, I think what concerns me is that you have a bunch of people who are growing up and they don't know how to run a profitable business. It's not, you know, it's not the norm, right? And as long as VC money keeps on flowing in, there isn't that discipline. There won't, you know, that discipline is not learned. I think one of the sort of benefits that we've had is we've been lean because, you know, of circumstances. So I think we are best placed to take advantage of opportunities when they arise. But, you know, when you look at some of the other companies, I mean, I am just baffled by the amount of waste that I see in the sector, and we're not challenging, and we're not meeting. You know, customers are still, you know, underbanked. Customers are still frustrated, and that's, you know, a challenge to ourselves, and should be for my fellow competitors in the sector, where, you know, we need to solve this problem. You know, so and that's where I see the future is.
I think that's a really fun answer. I like the different dimensions that I could pull strings on from that later, but not enough time in the session, unfortunately. But one last question before I hand back to Ronit, because we're cutting close to the edge of time. You know, with regards to where you're going and what we've just discussed, right? The tools that are coming, the other businesses that are coming through. How much of cooperation do you see yourself doing with other startups in the fintech ecosystem rather than building your own? Do you see that actually happening? Do you see that being somewhere where there's a mutual collaboration, or do you see yourself just saying, listen, we don't want to build dependency, even on tools or infra, we just want to build it ourselves? Are you at a different level now where you've got so much funding and you've got so much momentum, better to build yourself and compete rather than partner or work with other fintechs? What do you think? Where's that looking at?
I wish I could say we have so much funding. but you know, I'll never say that publicly. So we could definitely do it more. You know, answer to your earlier question, you know, we want to see, we definitely want to do more partnerships. You know, we want to go quicker working with other people. There's some interesting fintech companies coming up that are doing things that they're doing aspects of our business better than we can, because they can focus. So, you know, I think we should definitely be open to that. And you know, look, Carbon's expertise is credit. You know, we've been doing credit for 10 years. We're not afraid of you know, taking risks, taking good risks. We have a great data science and risk team. So we also want to share that with, you know, there are lots of fintech companies, you know, business digital banks that, you know, that aren't lending to their SME customers. We could partner with them. So we definitely want to open ourselves up to more partnerships to leverage our platform. And so that's going to be a key part of the next 3 years, where, you know, why lend, you know, completely all on balance sheet? You know, let's talk to some banks. You know, now that we have a track record and we can show banks, you know, when we started, you know, we'd go to banks and say, hey, can we use your balance sheet? And they'd be like, hell no. Now, you know, we have enough of a track record to show them that these are returns. We can take a first loss. We can protect your money. Let's use your money. We have the system. So we're definitely open for business and partnerships.
Thanks so much, and run it back to you.
Maybe just to pick up on that point, and Carbon's been all about credit, and Nigeria, Ghana, Kenya, they're all still underbanked. Where, and sort of weaving it back to Gaurav's point, where do you see like the next 2 or 3 years that are the big opportunities? Is it doing more, doubling down on BNPL? Is it trying to rethink SME lending, where obviously there's a huge market gap? Where do you see yourself, like if you had to put 2 or 3 bets, or calculated bets, let's not call them bets, but calculated bets, where would be the sort of areas you'd be doubling down on?
So we're going to focus more on the consumer, and because I think it's a different skill set to target, you know, SME and consumer. It's you know, we've done SMEs. People don't know Carbon well for SMEs, but we actually have a decent SME book. But there's so many other fintech players doing it and focusing on trying to bank the SMEs, and we think we should just partner with them, right. Help them lend, help them, you know, share the risk, and then who knows, M&A action if it works. But while we focus on the consumer in terms of retail lending and buy now, pay later, and also giving people a decent account. You know, people want to know that their money is safe. They want to know they want to have access to their money, and you know, if and when they need help financially, they want a financial institution who's there for them at the right time in the right place, and that's where Carbon is going to be. In terms of markets, I think Nigeria is still underdone. There's so much left in Nigeria. You know, Ghana, I think is. I think Ghana is also a place where there's not much fintech activity, at least from my view, and Egypt. You know, so for us, you know, we've always said we want to be a Pan-African credit-led digital bank. And for us, we think that there are a few key countries that would give us effective African coverage, and that's where, you know, we focus: Egypt, Cote d'Ivoire, Ghana, Nigeria, Kenya. That's where we would focus, and all of them have, you know, similar traits: high underbanked, unbanked populations. Smartphone penetration is decent. You know, entrenched banks. You have, you know, a few banks that have 80% of the deposits. I know, you know, ROE, return on equity rates in sub-Saharan Africa, I think it's next to LATAM. I mean, it's, you know, at least in Nigeria, it's about 30%. So there's a lot of money and lots of banks who are not providing access to their customers.
It kind of, your comments there about wanting to be a Pan-African lender or Pan-African digital bank, and it raises the old billion-dollar question, or trillion naira question, which is 54 countries plus territories, etc. It's not a country, it's a continent. How do you expand? Even just building in Ghana, is it like, how difficult or easy or similar is it? And then when you arrive in Egypt or Kenya, like thousands of miles away, thousands of kilometers away, how does it walk us through? And we haven't got that much time, but just walk us through how you build in these countries. I mean, you've obviously, and your friends and family have roots, deep roots in Lagos, Nigeria. It's home, but when you get into these other places, how do you build? Do you go and hire a good local general manager, or you get a local partner? Just walk us through that.
Yeah, no, it's Ronit, I said effective coverage. So when I think about, I don't want to plant a flag, because also investors get really scared when they think you're not going to the country. It's
when's Brazil coming? When's your Mexican expansion?
But that's not. I mean, there's some African fintechs that are actually looking at Mexico, and so it's not far fetched. But it's very challenging. It's not. We've actually interfaced and worked with central banks in three of those countries. So we know them really well, and it's not easy. So when people say I'm going abroad to different countries, it's not to be sneezed at. And on a side note, I do think the Central Bank of Nigeria is actually not the most difficult regulator on the market. In fact, it's probably one of the easiest we've dealt with. It's not a popular opinion, but it's actually true based on real experience. Right. And if you look at the Nigerian fintech market, it's very vibrant. But it's a mixture of, we go in, we work with people, local talent, because they know the market better than we do, right? It's taking the time to actually learn, learn the norms, and also learn what people actually want there, because it's easy to make a decision from Nigeria about what people in Kenya or Ghana or Egypt want or need. But there's some peculiarities that only somebody who's been through the system understands. So yeah, that's how we will expand. So yeah.
And my final question, I want to take us back to where we were right at the start before we went live. We were chatting about when you're going to get your version of Burna Boy and Wizkid. And who are you going to fly in? Are you just going to break the bank and get Beyonce in? Like, what are you going to do?
And are you going to invite us?
Where is all this VC money going?
Are you going to invite us?
Yeah, from New York, San Francisco, via Lagos into Afrobeats, right?
I think it's as I said, I think I have a few of the artists that I wouldn't mind.
Give a shout out.
No, I might offend the others. But no, look, I think it. But Ronit, I think it's good. I think it's look, why should Beyonce and co have all the fun?
Exactly.
Afro musicians should also share. I think what will be interesting is if they take some of their payments in equity. So
right.
That would be good. So Carbon is available for equity for any Afrobeat star who wants to be a spokesperson.
So you want to chill with the big boys called Chijioke Dozie.
You heard it here first.
Close. Thank you so much for joining us today.
Thank you so much. Absolutely. It's been a pleasure.